Hi, this is Charlie Jackson with your weekly market update. Housing was one of the big stories this week, with the latest numbers showing some cooling in both construction and home sales. Housing starts fell 12.4% from June to July. Builder confidence also remained subdued as higher mortgage rates, affordability challenges, and elevated construction costs continue to weigh on new construction. The resale market slowed as well. Pending home sales fell 2.3% from June to July, marking the second straight monthly decline, and were down 2.2% from a year ago. Mortgage rates and affordability continue to be a big part of the equation, causing some buyers to remain on the sidelines. The Federal Reserve was also in focus. Minutes from its July meeting showed policymakers continue to watch inflation and the labor market closely. The Fed held rates steady, although three policymakers favored a quarter point increase. And since then, inflation data has been more encouraging, while the July jobs report showed signs of labor market weaknesses. That could reduce some pressure on the Fed to raise rates, but there's still more data to come before the September meeting. Initial unemployment claims fell slightly to 206,000, suggesting widespread layoffs remain unlimited. However, continuing claims remain elevated at nearly 1.8 million, indicating that people who lose their jobs are taking longer to find new work. And finally, oil prices moved higher amid increased tensions between the US and Iran, another trend worth watching because energy prices can affect inflation. So, what's the takeaway? Well, the housing continues to face affordability challenges while the Fed balances inflation concerns with signs of a cooling labor market. So, if you're thinking about buying, refinancing, or simply have questions about today's market, I'm always happy to help. I'm Charlie Jackson, and I'll see you next week with another market update. Thank you for watching. Have a great day, and God bless.